Welcome everyone to the Florida Virtual Venture Capital Ecosystem Roundtable. My name is Zach Stein. I'm the Director of Investor Relations at Florida Funders. First and foremost, we wanted to wish everyone well, themselves and their families during this unprecedented times. We know it's been challenging, and we're grateful to have the panelists here today and be able to do a Zoom meeting for you guys and give you clarity and some sort of internal discussions on what's going on as it relates to venture capital in the state of Florida. So before we kick it off, I wanted to thank everyone for joining, and I wanted the panelists to go around and introduce themselves, who they are, what firm they're with, and the focus of what they're looking for. So we'll kick it off with Tom Wallace. Tom, please introduce yourself. You're on mute, Tom.
Thanks. Sorry about that. That's embarrassing. Well, I'll do that before this is over, I'm sure. My name's Tom Wallace. I'm the managing partner of Florida Funders. For those of you who are not familiar with Florida Funders, we are a hybrid between a venture capital fund and a crowdfunding platform. And we focus on finding, funding, and building the next generation of great technology companies here in our great state of Florida. We have made investments in about 35 companies and are pretty active in the early stage tech space. And we focus on SaaS, software, edtech, fintech, health, digital health, things like that.
Awesome. Thank you, Tom. Rebecca, why don't you go next?
Hi, everyone. Rebecca Danta here. I'm the Managing Director of Miami Angels. We are an angel network with over 100 members, and we invest in early stage software and medical device companies. We're Florida first, but we do look throughout the US and the Southeast.
Awesome. Thank you again for joining. Salo, go ahead.
Good morning, everyone. It's great to be here. My name is Sredni. I'm a partner at Ocean Azul Partners. We're an early stage C2A fund here based in South Florida, but we are geography agnostic. Actually, we're our second fund. We have over 18 companies in our portfolio, and we have 4 of them in Israel. So we mostly invest in Israel. In the US, we love fintech, health tech, deep tech, but all of it has to have some some kind of technology angle. It's great to be here.
Awesome. Thanks, Salo. Claudia, why don't you go next?
Hi, I'm Claudia, Managing Director of Endeavor Miami. We're a mission-driven organization, global organization supporting entrepreneurs to scale their businesses. And we look for entrepreneurs who are at that moment in time where they're a hockey stick and their company is ready for growth, and we support them in that journey. We have about 2,000 entrepreneurs around the world. We're industry agnostic, so we identify the entrepreneurs, and once they go through the selection process, we support them with different services.
Super, and thanks again for being here. Miguel.
Yeah, sure. Thanks for having us. My name is Miguel Cruz. I'm the Miami manager at 500 Startups. We're a global VC firm that helps empower economies through entrepreneurship. We have a little over $550 million in committed capital, and we've made investments in about 2,400 companies in 75 different countries around the world. Here in Miami, we're excited to continue our work in helping to grow the South Florida and entire Florida state ecosystem.
Awesome. And last but not least, Ben, round us out here.
Thank you. My name is Ben Patz. I'm a managing director at Deepwork Capital. We're an early stage venture capital fund. We focus on technology companies predominantly in the state of Florida, but we'll also look into the Southeast. We're predominantly either business to business SaaS or health information technology, but we'll also go into life sciences. We've made a couple of recent investments in that space.
Awesome. Thank you again, everyone. I am super excited to be moderating this, and I'm very humbled to be with this group. It's really exciting what's going on in the state of Florida. And everyone on this call specifically, I know our friends and know each other, and we're all trying to work together to continue the state and the technology and the entrepreneurs that we see. So we're going to kick it off. Before we do, everyone who is on the call, if you go into the chat button and you look at the person that says ask questions, we're going to be taking questions that you can you can type in directly to that person. And the last 30 minutes of this webinar, we are going to choose a few of those questions. And if you're open to it, we will put you on video to ask directly to the panelists that you want to ask. Otherwise, we will just read them off and go from there. So again, if you go into the chat, ask your question directly to the ask question person, and we will funnel them out and ask as many as we can at the end of this. So again, thank you everyone, and here we go. So the first question, one of the biggest looming questions is whether there will be a funding slowdown due to the lack of in-person interaction during the pandemic. Investing in a company usually requires face-to-face meetings in order to gain a deeper understanding of the company and the people behind it. Has COVID-19 changed your due diligence practices as it relates to in-person meetings? And has this affected deal flow? How has this affected deal flow coming across your desk? So Rebecca, why don't you kick us off with your answer?
Well, I'm proud to say that we closed a deal in the month of April completely online. We're not announcing the name of it just yet, but we will soon. But it was also actually our fastest deal ever. From referral to final investment commitments, we closed it in 3 weeks. Most angel groups are known for being slow, so we're particularly proud of the fact that we were able to close so quickly. So that proves to me that in our group, at least, we're still very much willing to invest if it's all done online. I can't speak to other groups, though. It's different for everyone. Will there be a funding slowdown? My guess is that yes, because some people aren't going to be able to be comfortable with it. And as far as funding slowdown in general, not necessarily just because of it being online, but there's entire sectors that are wiped out. So investors are not investing in certain areas, but then others are picking up, as we've been able to see. So it's going to really vary across the board. Awesome.
Thank you. Tom, why don't we go to you next? I know we've been very active at Florida Funders. Sort of just give everyone clarity on sort of what we're seeing as due diligence and sort of the funding that's taking place for us.
Yeah, we've been pretty busy, very busy actually, and we just did a deal in the last 2-3 weeks, Vizetto, which is very timely. We had been working on this deal before the whole COVID crisis. It was all done, as far as I know, virtually. I don't think we ever met these folks in person, but it's kind of Zoom on steroids, so it's really appropriate for the time we're in. This deal, but it was very well received by our crowd investors. We weren't really sure in this environment how that was going to go, and all they did, all their action was virtual. So we're excited about that. We have a robust pipeline because we had quite a few companies in our pipeline going into COVID, and we plan to do 1 or 2 deals for the next 3 or 4 months, and we have them all backed up and ready to go. And we're excited that the investors are still active. And one other thing I would add, if you look at 2008, 2009, coming out of the last recession, there really was not a slowdown in the one stage of investing that really didn't slow down in terms of number of deals and activity, at least from my research, is early stage tech investing.
Awesome.
That bodes well for all of us, I think.
No, that's great. And Salo, I know you see a lot of deal flow from Florida, but also Israel. So speak about sort of what's happened with your guys' due diligence and the face-to-face.
Yeah, so we've seen deal flow really slow down, quite frankly. I think companies are still trying to sort out exactly where they're at. I mean, we had plenty of deals in the pipeline, but we sort of took a step back, out of the crisis and figure out exactly what is that we want to do, what companies want to support. Are there any companies that we looked at that are going to do better? Because in every crisis, there's winners and there's losers, right? So you want to have more of the winners and less of the losers. And we've been lucky that way. So on your question about meeting people in person, I will share a story. We have one company. We have as a policy that we will not invest in any company that we don't meet the management team face to face. So it'll be interesting to see how we do during COVID. But I will tell you that as a result of that policy, there was one company that we really liked that we found out was a fraud by pushing to meet their management team, meeting their offices. So I will push pretty hard for at least a Zoom tour and meeting a large percentage of the management team. So I think you can accommodate, but I think still seeing people and meeting face to face is something that we have to find an alternative for.
Sure. And thanks for sharing that. And I guess Claudia and Miguel, knowing that you guys are global organizations, what has sort of been what you guys have been seeing, not only here locally in Miami, but also throughout, both your organizations? Maybe Claudia, kick us off about how the face-to-face has gone through this entire pandemic.
Yeah, it's been interesting for Endeavor, as for the past 22 years, we did in-person selection panels around the world, and it's always been in-person interviews. And we had to quickly shift to a virtual format. And so we tested out through Zoom doing the international selection panels. We already did 2, which went really well. Of course, it's not the same as having the experience in person, because it's a 3-day experience. You meet the panelists, you have the teams there supporting you, and everything then shifts to virtual. So you lose that connectivity in person. It's harder to read the body language of the person through Zoom, through the camera on the computer, which I think is an important part of also meeting the entrepreneurs and knowing how they maneuver in their interviews. But it worked out. For us, we were able to successfully migrate to virtual, and we did in Miami for the first time our virtual local selection panel last week, and we selected 2 companies. So awesome. We're very happy that went well. And all of our team has migrated to doing virtual mentorship sessions and connecting investors to the entrepreneurs. So we're doing everything virtual.
That's awesome. It's super exciting to hear. And Miguel, same question to you. I know you guys have your office here in Miami, but also globally. So give us insight, sort of what you guys are seeing as it relates to face-to-face with entrepreneurs and new deals.
Yeah, sure. So, I mean, we have programs running around the world practically every single day of the year. So when this crisis hit, we had to flip on a dime and pretty much take everything remote. In some cases, from one day to the next. In other cases, we were fortunate to have a week of time, at least to prepare. But that's not ideal, but we had to do it. And so far it's been a great success, and we've still seen the community building that we like to see come out of that. In terms of the funding slowdown, that was the first part of your question. I know that, Rebecca had mentioned something earlier about there have been some sectors or some funds that have slowed down, but in terms of funds that have capital to deploy and that have to deploy that capital, we still see the same amount of funds coming out. I will say, that the due diligence is obviously getting a little bit strict, or stricter, you could say, than normal. Folks really want to understand, like, what is your plan for a post-COVID environment or post-COVID economy? Within 500, what we're doing is our content is our way of testing that. So the content that we deliver not only provides value to the startups in terms of best practices or tools that they can use immediately, but it also provides us insight into, have you thought about how, what are your target customer segments? How do you activate the buyers in those target customer segments? And given the interactions that we have with you, even in an online setting, we're able to get good understanding. So that's how we're doing our due diligence, and we're going to keep, chugging along.
Awesome. Thank you for sharing that. And Ben, just to round us out on this first question, I know you guys have a strong focus in Florida. Have you seen any difference of the face-to-face meetings as it relates to deals, and what's sort of on the funding slowdown? Will that take place, and what are you guys looking at?
Yeah, so I think you've heard the answer coming from a bunch of different folks covering the whole spectrum. I think it's fairly clear you're going to see some level of funding slowdown when you look at this in aggregate, because it's not 100% clear what the impact on certain business segments is going to be, how long the impact is going to be, and I imagine that certain venture capital, even angel investors, are going to look at that and factor it into their investment. As far as the meetings being in person or not, We always did a number of the meetings virtually, and certainly early introductions with companies can all be done virtually, and we expected that normally. But we also, and I think share a view that Salo has, that meeting with the team, at the very least, understanding what the facilities that they have, what the resources they have to deploy on a problem is critically important. And so we still attempt to do that. So I would say this virtual hasn't slowed down the number of deals that we see, certainly hasn't slowed down the number of people that we talk to, but it will slow down the number of people we invest in. And it makes, you probably push the in-person meeting just a little bit, but there still needs to be one.
Awesome. Just want to remind everyone, if you guys do have questions, to go over to the chat and message the person that says ask questions here directly, and we will get to those at the end of the webinar, the last 30 minutes or so. On to the next question about raising money. The consensus for companies of all stages right now looking for new funding was to turn to existing investors rather than seeking out new ones. A lot of people were concerned about their burn and their runway for them to get through COVID. What have you guys seen for companies looking for new funding? And maybe more specifically, what are you telling portfolio companies who need capital in your portfolio that weren't expecting sort of this COVID, about how long they can continue to maybe shorten their burn a little bit to extend their runway? So let's talk about portfolio companies specifically, what you guys are telling them who need capital, and maybe the best option that they have at this point. So Ben, why don't you kick us off?
Okay, so we reserve a fair amount of capital for existing portfolio companies, and what we tell them is, look, in a tough time like this, cash is king. So conserving cash is absolutely critical. Every single one of the companies in the portfolio has looked at cash conservation measures, and then we've asked them to go look to the existing investor pool. Usually, obviously we're one of it. They're in their portfolio companies that, for additional capital should they need it. We've been fortunate that several of the companies happen to be in business sectors that, COVID has actually helped out. I mean, they've provided solutions that are critical at this kind of time. And so their business has increased, and we've encouraged them to, work hard to expand their business during this time. But generally, there's been a cash crunch, and we've managed and instructed our companies to manage cash accordingly, really from the very beginning, assuming this was going to take a little bit longer to recover than what people initially thought.
Sure, makes total sense. And Rebecca, we'll go to you with the same question. I know you guys have a great portfolio. What are you telling portfolio companies now who need capital?
Yeah, this is great. And it's interesting because we have funds and angel groups on the call, and it is a little different. We do advise angel investors to save for follow-on in the way that a fund would, but obviously the structure is a little bit different. The first thing that we did was check in with the portfolio companies on what their runway looks like. And oftentimes, if you believe that the company is going to make it through, then and they maybe just need a lifeline, a little bit of runway, that's what existing investors are for. But in some cases, you're having hard conversations with companies. I think what's happened is that this has accelerated what was going to happen anyway. So there's some companies who are just not going to make it through. And as an investor, it doesn't make sense for you to just be funding 3 to 6 months of runway if the company's not going to make it anyway. So that's really important to look at. And then outside of portfolio companies, there are opportunities. Ben mentioned this. There's companies who are doing well. And in those cases, they should seek outside funding and not just go to their existing investors.
Sure. And Tom, let's go over to you. Obviously at Florida Funders, we have a fund and also a crowd. So what have we been telling portfolio to need capital, and how we reserve cash to support them, during this entire thing? You're on mute, Tom, I think.
Sorry about that. Somebody texted me, this isn't vodka in here, it's water. Right? But anyway, same thing, everybody's saying cash is king, cut your burn, extend your runway. Those are the big three things. Raising money is who knows how difficult it's going to get here. A lot of that, I think, depends on outside factors that none of us can predict, such as, you know, what happens with the virus, what happens with the stock market, all those sorts of things. You know, we were like Ben, in all funds, we reserve some money, we reserve funds for follow-on investments, but we're scrutinizing those more than ever. You know, there's spaces that are just obviously getting crucified right now, anybody in tourism, hospitality, restaurant tech, all that stuff. But there's also spaces that are doing well and companies that are doing well. PPP has been a huge thing for our portfolio companies. Almost every one of our portfolio companies has got a PPP loan. And that's been anywhere from, on the low end, you know, companies getting maybe 100,000 to, we've had companies get over $1 million. PureFit, I think, got 2 million or something. So PPP has really been an important thing right now for these companies and helping them in cash. So that's been a real blessing for most of these companies. So that, you know, we're working closely with our portfolio companies, trying to help them and get through this and live to fight another day and on the back end of this.
Awesome.
Yeah.
Salo, same question to you on raising money. I know you have portfolios in Israel and here. What have you guys been instructing to your portfolio companies who are looking for capital or might need it to get through this COVID?
Yeah, so just to reiterate what most have said, I mean, the reality is that you worry about those things you can control, and what you can control is the burn, right? So we work very hard with all our portfolio companies to decrease burn, increase runway. Our view was you need at least 12 to 18 months. The more, the better. We do see valuations coming down. I don't know if that's everybody else's experience, but valuations have come down a little bit. We've done some investment post-COVID and after COVID, and pre, and we've seen valuations. So you have to have runway, and fundraising really is about continuing to have conversations and to continue to keep bridges open. So it's now more important than ever is really to understand exactly who's a potential investor in the future and to keep open lines of communication. I will add that I am drinking vodka. It is the afternoon in Europe, so everybody should feel free to drink vodka. It's okay now.
Cinco de Mayo continued.
Exactly.
Miguel, sort of speak about, I know you guys are local again, and just so everyone knows, 500 startups. Give us a sort of global view of what's going on, what you guys are telling your portfolio companies who are looking for additional capital throughout this.
Yeah, I mean, not to sound like a broken record, but it's pretty much the same stuff that everyone's been saying. For us, it's really been the first thing we did was let's examine that cash flow and that burn. What does that look like and how can you improve? We've actually had some educational content that we provided our internal portfolio companies, and then outside we're actually, for example, running a boot camp in Miami in 2 weeks, completely online, or run out of our Miami office completely online, on bootstrapping. And the idea here is, can you continue to grow and scale if there is an opportunity for your company to do so? And if not, let's have some tough conversations. But yeah, I mean, cash flow is queen right now, and that's what we have to, make sure that we're optimizing for.
Awesome. Claudia, I'm going to start the next question with you. We're going to go into some investor.
Can I just add something on the previous question? So the way we've been also supporting the companies in our portfolio, some of them are still fundraising. So we continue to do connections with VC funds or angel investors for them. And so we are actively doing those introductions. Obviously, there's some slowdown, but we continue to actively do the introductions. And for some of the companies, when we were looking at their runway, we also actively reached out to several banks to see if they were able to do like alternative financing options like debt, or helping or advising them to increase their lines of credit if they already had a line of credit with their banks, to see if they could get some extra cash. And for some other companies that were receiving term sheet or currently term sheets, we will review the term sheets and advise them if that terms and conditions were favorable, or if they could wait a little longer to sign those deals or accept that investment.
Awesome. So now that we've sort of set the tone, I want to make this very interactive for our panelists. So when we start asking these questions, if you guys want to, just comment, we can all jump in. we'll be able to go to you guys pretty quickly. So the next question here is, as an angel investor myself, I personally think it's a great time to fund startups. We've talked about a few of the industries that have taken off during this COVID. What would you guys tell a new investor today looking to get into a venture capital in a post-COVID world? So whether that be an angel or coming into a venture capital fund, what would you tell that new investor that's coming into that today? So whoever really wants to kick it off, and we can make this really interactive.
I can go. Oh, Salo, I see you.
Ladies first, Rebecca. I'm not going to go. You go first.
Well, my advice is you're lucky because you don't have any potential portfolio companies that may go under because of this. And you can just be really choosy with what you decide to get into. And it's very opportunistic investing right now. There's better terms for investors. Valuations are going down. And you can really choose your thesis and see what's doing well and back that. So you're lucky.
That's awesome. Sal, go ahead.
Don't waste a crisis. Don't waste a crisis. I think if you look historically, some of the best returns in just about every asset class has come after you have clarity from a crisis like this. So the reality is there's never been a better time to put your money to work. And we've actually seen quite a bit of interest in investing in the asset class. And right now it's a great time to see, there's going to be tremendous growth coming out of this. How quickly we can all argue about, but we will miss the opportunity.
Yeah, I'll follow up on that one. So I agree that it's with both of you, Salomon and Rebecca, that now there are opportunities available. The advice that we would share to potential investors is obviously take a look at everything that makes sense, but be wary of products that are entering a very saturated market, or a market that people are just now all of a sudden everyone's all about this and this is what's happening, and you're going to be betting on one of 10 or 20 products that all look good. So be wary of that, because there will probably only end up being one or two market leaders. What 500 Startups likes to do is we really like jumping into verticals and economies and ecosystems that are very nascent. That's where we add the most value. So finding verticals such as supply chain or advanced or additive manufacturing is definitely an interesting place that we'd love to explore, and that we can and that we can definitely provide value. So look into some of these places and do your research, and I think there will be great opportunities that pop up.
Hey, Zach, if I could just add to what Miguel said, what I keep telling people is that just like the virus, whatever the virus is doing to people, it's doing to businesses. If you have comorbidities and you were sick coming into this and you were struggling, the virus may just kill you. But if you're healthy, you may just have no symptoms and quite frankly be able to grow quite fast. So I think it's very analogous to what's happening with people.
That's a good point.
There's also two things to think about that also build on what Miguel said. And one of them is you're not looking to invest in something that solves the problem right now. You're looking to invest in something that's going to solve a problem that's going to come out of this, that's going to be into the future. Look forward. And then number two, if you're an angel investor, in the past, while getting angel investment in companies has always been difficult, it will be even more difficult now. So make sure that there's enough capital around the table to get your whatever it is you're investing in to the other side.
Yeah.
Great point.
Yeah, I would add to that, none of us knows what the new normal is going to be on the back end of this, right? So how much in the future are people going to be jumping on planes quickly to travel for business meetings instead of doing Zoom, and how things change on, as we come out of this. But it certainly seems like it presents great opportunities for investors. And, whether it be, you think about how the restaurant industry is changing, delivery and takeout's becoming such a huge part of that business. One of our companies we've been working on is in that space, and they help solve that problem. And of integrating that, how restaurants work in that. So I think, like Salo said, out of every crisis, there's great opportunities. And if you look at from a fund standpoint, we're getting ready to raise our second fund. A lot of returns determined by fund are what the vintage year is. And the vintage years, again, of 2008, 2009, those funds did really well, most of them. So it's echo what everybody else said. It's an exciting time to be investing. There should be great opportunities. You just have to be patient, smart, and disciplined in how you go about it, as always.
Yeah, can I add something? And from some of the companies that we're seeing in our portfolio, and also from our pipeline, we're looking at a lot of this innovation in, for example, Edtech. They really have had exponential growth just month to month from March to April, and also on online learning. I've spoken to some companies who are telling us that they've grown 10x from March to April. There's a lot of demand for online learning, not only for languages, but also for other skill sets. So we're seeing a lot of these companies that have a lot of technology in the online, or also telemedicine. They're going to have a high growth and demand.
So that's a great point, Claudia. So for those specific telehealth and e-learning, do you think that those are specific to the state of Florida as far as the industries that are going to gain traction? Obviously, we know we have a big healthcare presence down here in South Florida specifically. Is there any specific industries down here that you guys are seeing will really gain traction throughout this entire thing?
So for the ones that I were telling you in Florida, Nearpod is one of the companies that we support, and they're here in Florida, and they've had exponential growth with their online platform. They actually have offered the online platform to schools around the world for free in the past 2 months. So that has got momentum for them, but also, exponential growth. And we had another company, I don't know if you're aware, Transparent Business. They work for remote access to remote work. They do a lot of the tracking for companies for their employees. They're also here in Florida. And Open English, for example, he's Andres Moreno is our co-chair on our board in Endeavor. They also had great exponential growth in the past month. So we're seeing a lot of these in this space. For telemedicine, I don't have any of those companies in our portfolio, but for sure, I think it's a time where a lot of these companies in this space are thinking about how to incorporating technology to bring, actually there's one, I don't know if you're aware of healthcare.com, for example, they're also here, and they've been really having momentum supporting their clients with healthcare insurance, et cetera. So yeah, there's a lot of companies down here in Florida that are going to be very attractive.
Yeah, it's super exciting to see. Anyone else want to, I just want to jump in and talk about Florida specifically right here in the terms of industries. Are you guys seeing any specific industries that, as it relates to deal flow coming across your desk right now during this whole COVID thing?
Happy to chime in here. I mean, 500 has always been industry agnostic, so we're seeing folks from all over continue to apply to all of our investment and non-investment programs. In terms of proactive outreach that we're doing, I touched a little bit earlier, like we're definitely curious and interested about anything that's happening in the advanced manufacturing and supply chain aspects of it, particularly here within the United States. We're trying to get better understandings of what are the softwares and hardware technologies and services that are being provided, and how they can help improve a lot of the supply chain problems that not only our country but countries around the world are having. We feel that that's something that's interesting, and we're definitely actively looking at it. If there are startups within the state of Florida that are pursuing this or that have products and services that are doing this, we're very interested in speaking with them. Especially since South Florida did have a big logistical concentration of companies. And obviously, while some of those have been affected, how can we kind of shift those products and services to folks that are a little in-house? Definitely interested in chatting with those.
That's awesome. I want to jump into sort of one of my favorite questions that I always like to ask. Is an investor, when you guys are looking at companies to invest in, this is always one of the bigger questions out there. What is the most important aspect that you guys look at specifically that you like to consider? Is it team? Is it traction, technology, terms? Sort of walk through like what your perfect ideal situation is. And then the second part of that, has the current climate changed what you guys are focusing on, knowing that, you might not be able to meet the person in person? What is the, the best things that you guys are looking at, throughout this entire thing? Anyone sort of?
I was going to give you the perfect scenario is a team that's built six unicorn startups previously, has a technology that's absolutely unique for which they already have the patent filed, and as a matter of fact, it's approved. And oh, by the way, they only need $1 million to get there, and they only have $1 million valuation. The reality is that there's any number of of factors, and we'll all have our own key elements of factors here. But the earlier you are, it appears from the data, the more critical having a team that's committed to the problem, that has some experience in the space, and has the stick-to-itness to work through a challenge. I don't think anybody envisioned the challenge was going to be COVID, but the challenge is going to be something. And so that's, I think, the very first thing that at least we look at is if you don't have that, you don't have anything. Then there's a whole list of other things, and I won't go through the longer list of things other than to say, we think it's very important that you have an understanding of who your customer is, what your customer needs and wants, and be able to articulate that value proposition very clearly, and also be able to deliver that value proposition with some level of defense. What's special about the way you do it? How are you protecting that? And if you can do those things, odds are you can get there from here. But those are just a couple of items. But I do like the company. So if any companies are out there with, have started 6 unicorns, have the IP already protected, and I only need $1 million, please call.
Yeah, that's awesome.
I'll volunteer for 2-3 million, even if it's not $1 million. I'll pony up 2-3 million with those characteristics. But I agree with everything Ben said. I think grit, resilience. I think all of us that have invested in early startups know that where they start is not where they end. And in today's day and age, they're pivoting. That's the new word everybody likes to use. They pivot every 3 to 4 months. So you need a dedicated team that knows how to pivot in advance of it becoming very clearly that you need to pivot.
So Sala, just on that real quick, I know that you guys look at a lot of technology in Israel specifically, and I think for all of us, it's really easy to fall in love with an idea, right? Obviously, some of the technology that you guys see coming out of Israel and what they're known for historically, what does it come down to when you look at an idea as far as, you like it, what sort of next steps, how long does it take to get to a term sheet and end up deploying capital?
Yeah, so in our instance, it's got to be unanimous. So all the partners have to get comfortable with not just the tech, but also the people and everything around it. And I think, as Ben mentioned, having a very clearly articulated strategy that's cohesive. They know who their customers are. So I think we only invest in differentiated technologies. We won't invest in Me Too companies. So we won't invest in the Cuban Uber, for example, is the example I use. So we're pretty disciplined and have pretty good filters and pass on companies that we know will be successful, but just they don't meet our criteria. So I think that most funds that are very clear on what they're looking for are the successful funds, and we try to be very disciplined. So we see all kinds of great technology. We see all kinds of great teams. But the reality is, you need. I always tell people it's very hard to find somebody for a portfolio. You got to have the right team with the right idea, with the right business strategy, at the right valuation. Let's not forget that, like Ben said. Right. And it's hard. So technology is just a piece. It's making sure that you have all the right things. And by the way, the last thing is, can we help them? Is there a way that we can add value?
Yeah, Rebecca, I know you guys are super involved with the portfolio companies that you guys invest in. What do you look look at from the outset as far as team, technology, terms, all that?
Yeah, we've all said this, but especially now for new and existing investments, you just need to be extra scrutinous. But it's hard to pin it on. You can't pin it on one exact thing. But if I had to weight it, I would put the team first. I've seen the mistake firsthand of falling in love with the product. The product so often does change, and it needs to be that you have to trust that the team is going to be able to solve it and figure out the right strategy for the company. The other thing is that as an investor, you have to generally agree with the strategy because you're not the one running the company. To me, it's not a good investment to say, okay, I'm going to come in, but I really need them to completely change their entire strategy, because that's just going to end up being really frustrating for the investor. So team first, product may change, but of course that's something you should look at, and you need to look at the market too and make sure that you're going to get the type of venture style return that you're looking for.
Sure. Zach, let me jump in here on the team thing, because I think I look at that maybe a little bit differently. Obviously, we look at the team as very important, but it's really, for the most part, when we're investing, it's not a team. It's the founder and maybe a partner. And that's what we're looking at. We're going to help them build out the team. They're going to have to fill in gaps. The team is usually not in place when we're investing. We do look very closely at that founder for the things that I've heard here, from other people, stick-to-itness, or are they going to have they're going to stay with this thing? Are they all in? And one of the things we look very strongly at is how much skin do they have in this game? If they've had a previous exit, how much of their own money have they put back into this company? How long are they taking, how long are they going to work without taking anywhere near a market salary? What are they looking at in terms of, putting their reputation on the line, their credibility on the line? We want them all in, all committed, so that, as Ben said, the going is going to get tough. The problems are going to come, and maybe it's COVID, maybe it's whatever it is. They're going to have to fight through it, and are they going to have enough in it that they're going to do that? And so that's what we really look at very, very strongly.
Tom, thank you for specifying. I agree with the founder too. When we're investing at this stage, the full team's not set up, and the deal that we invested in together, Pickup, they were lacking some key roles when we invested, and we were all comfortable with it, and we've seen it grow. And that one was very much backing the founders and the market, right?
Yep, absolutely. Brenda Stoner, the founder of that company, is really strong.
Mm-hmm.
Let's talk about a little bit of deal structure. It's one of my favorite topics. Are you guys seeing or looking at any new sort of creative structures in terms of financing companies throughout this? Are there any new structures as a result of what's come out of this, or are you guys telling portfolio companies that, I know Tom mentioned some PPP funding, which has allowed a lot of these companies to extend their runway. But as far as like really creative structures on the financing side, are you guys seeing anything new pop up?
Wait, Zach, you keep saying PPP. We've seen some companies that have refused PPP, which is, I think, an interesting point. I just warn everybody out there that you have to certify that you had no other way really to finance the company. So I think companies have to be very careful that if they do take PPP, that quite frankly that was their only way. I mean, if companies are well financed, they have to be careful, just given what's been on the press. I spoke to a company yesterday, just unrelated, and I said, valuations are depressed, and they're upset with valuations. We're not going to invest. We're not interested in the company. But I did suggest as an alternative view to earn back some of the equity by putting milestones. Right, a company feels that they're being unfairly. Valuation was being put down. I said, okay, so put an option plan in place. If you hit the milestones you're going to hit, and you do feel that the value is incorrect, to get it back. But there's those 2 points.
I think one of the things that we worry about. I mean, I agree that valuations are kind of coming down a little bit, and then there may be a room for a little creativity. We worry that getting too creative with structure is being too smart for your own good, and you're missing fundamentally what the objective of what you're trying to do is. So I would say Yeah, I can talk about some interesting things we've seen and talk to people about, but generally we're not going to move a whole lot off of what kind of more typical structures have been. At least I would say it's unlikely for us to move off of those.
Yeah, I would echo that. We have two deals coming up. One is Stylist, another one's Client Book. They're both text sales marketing companies that we think are really well positioned, very strong founders. The terms of those deals are very similar to what they were going into COVID, and we did not renegotiate the term sheets. We did not renegotiate the valuation because we'd been talking to them prior to COVID. We just didn't think that was the right thing to do. Where we are seeing some, I wouldn't say new, but old things come back up, or really companies that are running out of cash that are doing follow-ons that are maybe a little more desperate, is a way of saying it. So we're seeing more liquidation preferences. I mean, the stuff's been around for a while. We just, the environment for the last couple of years has been very founder friendly. I think we would all agree on that. That is starting to, we think that's starting to switch over to becoming more investor friendly. Not that these founders and investors are at odds with each other, but just, at a macro level.
Yeah, I'm happy to throw in a couple cents here. So, 500 Startups has always been pretty consistent in terms of our terms. We really, specifically out of the San Francisco flagship accelerator and investment fund, we don't typically change those terms. Everyone gets the same deal. That being said, in terms of, follow-on investments or the advice that we give our own portfolio companies or startups that go through our non-investment programs is, we are adamant that, the investors that you choose to work with, they are your partners after this. So you have to make sure that you feel comfortable working with them after the negotiation is done. If you feel that an investor right now is trying to, let's say, take advantage of the circumstances a little beyond what they should, there's nothing wrong with valuations going down maybe a little bit. But if they're really trying to stick it to you, that's probably not the type of partner that you want to pursue, particularly if you're in a good position to negotiate. So it's really about coming to an agreement. This is like a friendship. It's like a marriage. You're going to be working with these folks every day, hopefully until you sell. So make sure that you can trust the person on the other side of the table, make a good deal, and move forward.
Yeah, it's a great point, Miguel. I love that. So guys, we're going to have one more question for the panelists, and then we're going to go into some Q&A. We've seen a lot of questions come in, so thank you. The last question I have for you guys, being that we're all here in Florida and we're all looking to grow the state ecosystem and find the next best companies here and support the best entrepreneurs, Florida before COVID and currently was really trending up when it comes to the strength of the technology ecosystem. And a lot of that is due to everyone on this phone call. We have all worked together, we've co-invested in deals together, and we all sort of have the same mission for the state of Florida. Do you see Florida continuing to go sort of up and to the right as it relates to technology and deals that are coming here?
Yeah, I'm happy to kick us off. So, at 500 Startups, since we've been on the ground in Miami now for a little over 2 years in terms of our office being open, and we've had staff and programs running for quite a bit longer than that. We're very bullish on what we've seen, particularly given the fact that they've been in a wide variety of verticals. And we're really excited about the early stage startups, what we're calling pre-seed or actually pre-seed. Folks that are just beyond MVP, but are kind of getting some traction going. We like the teams we're seeing. We like what they're able to accomplish and where they're going. Obviously, given the circumstances of the world today, there are some key verticals that folks are operating in that there are things outside of their control that, these companies might have some hard times moving forward. That being said, there's, as I mentioned earlier, there's plenty of opportunity during these times, and there are still verticals within Florida, such as, again, supply chain, logistics. If these can be, tweaked or pivoted in a way where they can take advantage of the circumstances that we find ourselves in, there is really great opportunity. And, if there's a down, or an upside rather to some of the unfortunate layoffs that have been happening, particularly in South Florida, there's a lot of really smart people that are available to devote time to this. So right now is a good opportunity to make these investments. So that's our view. It's not as positive as it was, 3 months ago, but I don't think the world is either. But we're still very excited about what we're seeing, and we're going to keep pushing forward.
Yeah. I would add that here in Florida, as you'll remember, the Lab Miami kicked off the whole ecosystem, and then we have 500 startups and Emerge and Miami Angels and all of the people here. So together we're creating this ecosystem and attracting more companies, not only technology companies, but other startups that can be attractive to start here in Florida. I'm also seeing an influx of companies and founders, entrepreneurs migrating from Latin America and establishing their companies here in South Florida. So that we're going to see more also inbound of companies coming here. And Endeavor is supporting the life cycle of the entrepreneur. So early stage under 1 million, we have an accelerator for smaller businesses. And then we have our scale up program for the ones who are probably between 1 million and 3 million. And then our Endeavor program above 5 million. So we're looking at all the stages for these companies, supporting them in their growth. So we're excited.
That's awesome. Tom, I know you have been very bullish on Florida. You built and sold your companies here. What was sort of the reason, you got into Florida Funders and how we've sort of grown and sort of what you see happening in the next couple of years here?
Of course, we're still bullish on Florida. When you compare us to other states, we have a lot to offer, as everybody on this call knows and is committed to. We see two things. We see, and I think Miguel talked about this, we see teams and founders here that continue to be impressive and really some good tech coming here locally. And then we see people coming here from other places. Bozzetto, the company we just invested in, is going to be moving. They're a Canadian company. They're going to be moving to Florida or opening a Florida office. And we see that with a bunch of our recent investments. So, we've got that immigration, if you think of it that way, of entrepreneurs. That's really a tailwind that I think is going to serve us well for years to come.
That's awesome.
As far as capital, Tom, I think you've said there's as many accredited investors here as in California, was it?
I think we're third. I think we're behind California and New York, and we're really close to New York. But unlike those states where a lot of those accredited investors made, in California particularly, a lot of the accredited investors made their wealth in technology. In Florida, a lot of our accredited investors did not, they made their wealth in real estate, construction, insurance, you name it. So that's where the education part comes in. And in our crowd side, which we're up to 1,500 accredited investors on the crowd side, we're constantly trying to educate them on this is a real viable asset class. It can really, if you do it right and you're disciplined about it, can outperform pretty much everything out there.
Yeah, it's a great point. And I would touch on the education part. Obviously, me being from down South Florida, we know that a lot of the wealth here has historically been made in real estate. Everyone on this call is really doing their parts to educate the ecosystem here. Maybe people who were unaware of venture capital or how to get involved in venture capital. And from events that Endeavor, 500 startups, Miami Angels, we're putting a lot of content out there. So I'll just say it's been very humbling that everyone is trying to work together to continue to grow Florida and look for the best entrepreneurs down here. I'm going to introduce Saxon Baum now. He's the VP of Investor Relations at Florida Funders. He is going to read through some questions that have been submitted, and we'll throw them out to the panelists now. Saxon, why don't you jump in?
Yeah, absolutely. Zach, thank you so much. And thank you to all of our panelists. It's been an amazing morning so far. I've been getting questions in the chat. I'm just going to throw them out there, and whoever would like to answer them from the panel, please go ahead and do so. I have about 10 questions at this point. First question, we started a 24/7 health TV channel 18 months ago and are now seeing intense growth in interest locally, nationally, and even internationally. As a PBS TV station, how do you pursue VC funding?
Lots of silence here.
Yeah. Anybody want to hop in?
So any one of these opportunities that's presented, with that short of an introduction, I think all of us are challenged to be able to, provide, really insightful, thoughts in that short a period of time. But some of the comments that were made as it's a public broadcasting service, and you're looking at this being venture fundable, the question is, what's the venture connection to that? And so if that can clearly be articulated, hey, there's an opportunity here. I think the other thing that's clearly an opportunity is thinking about how you're going to deliver content through a non-traditional TV media, and that offers potential interesting venture investment. So I'd put those out there. I mean, I'm not sure any of that's particularly insightful for anybody, but at least give you some ideas.
Thank you, Ben. With VC and angel capital investments projected to fall 50% this year, and equity crowdfunding showing the highest investment volume ever, do you think that for an independent investor, it's better to invest through an equity crowdfunding mechanism? Tom, do you want to kick this one off?
Well, I'm obviously really biased here, but I was an angel investor for 25 years before I got involved with Florida Funders. And one of the things I learned as an angel investor is it's really, if you're going to do it right, it's a lot of hard work. I mean, doing the due diligence, as everybody knows, and Rebecca can speak to this, and Ben and everybody else on the call, the due diligence, the hiring the lawyers, the documents, negotiating the deal terms, hiring, putting the whole thing together. What we offer at Florida Funders and the other equity crowdfunding platforms is we really do the heavy lifting for you. So we make it very simple and easy to be an angel investor, and you really don't have to get very involved in the due diligence and all the work, because we do it all for you, and you can just piggyback off that. So again, very biased, but no, I and that's one of the reasons I got involved with Florida Funders, because I've been on the other side of it, and it's tough to go to.
The other thing I see too is worse valuations when they're done through a group like an angel group like Florida Funders or Miami Angels versus on the crowdfunding website for the investor. Not as many protections in the terms. And then the other thing is that crowdfunding lends itself more to consumer facing products. So if you really like enterprise software, B2B, it's going to be tougher.
Again, I'm biased too. It's like you're asking the media industry what they think about being vegetarian here. But I look at it from the other side, from the company side. Are you better off sourcing funds from a crowd, or are you sourcing funds from the right fund that's going to help you grow and help you all to do the right thing? So I've had many friends that have made a small fortune in venture by starting with a big fortune, and they've decided to let professionals do a lot of the work. So I just be careful with listen, if you're great at it, no harm in going at it yourself, but it takes some discipline and some hard work to get this done.
I mean, the only other thing that I'll add is something that somebody said earlier, and that is traditionally the fund vintages post crisis are the highest performing fund vintages. That means the active management styles associated with those are particularly valuable to the investors.
Thank you. Next question. How do you see the growth in EdTech continuing past this current crisis?
So is the question more in what area? I mean, it's
how do you let's talk about EdTech, where EdTech is going past this crisis, and sort of what we've learned throughout this crisis about education technology.
Well, I have a background in EdTech. I ran an online learning company for 13 years, and my my girlfriend's kids are at Hillsborough County School, and they're obviously doing this virtually, and technology is embarrassing. It's 20 years behind the time. So whoever has a good platform for K to 12 right now should just be cleaning up. I can tell you that. We're investing in a company, Quant Hub, which does EdTech for deep learning and AI professionals. And we're very bullish on them because we think we've always loved EdTech. We think it's a great space, and it should only get better as people are doing everything more virtually coming out of this.
So the only caveat I would give, and I mean, I'm like Tom and our firm, we share some investments in the space. So I mean, clearly we're very, very, very bullish on this space in general. The one comment that I would make, just to give you a little bit of some of the other side, is that in the near term, funding for whether it be state level funding or government level funding through educational sources is going to be challenged. And so the question is, to what extent does that impact the investment opportunity? And you just need to make sure the specific investment opportunity you've got can deal with that.
Yeah.
Yeah, I'll add on to that in a certain way. So it's also about procurement. So just because you have the best product, how do you actually get these local governments, local school boards, universities to actually purchase it? As we've seen, and particularly as we teach in some of our products, enterprise sales and then particularly government sales are very long sales cycles. They take a lot of time. And then in order to grow and scale, you have to really, put a lot of time and effort into it. So the technology is obviously huge. It's really going to come down to the founding team or the team members that are on there now in terms of how they can sell and sell quickly.
Yeah, I can give an example. For example, Nearpod, they're a Endeavor company. They signed a deal with the entire state of Utah. So now it's a statewide adoption for their technology in all the schools. So that will continue after COVID-19 crisis. So I think that EdTech, depending on the technology that you have, would be make sense for some of the schools to continue adding that technology into the classrooms.
Thank you. Another question here. We are currently building an accelerator in Gainesville and would like to build partnerships with investment groups. Have you guys had any partnerships in the past or worked with accelerators? And if so, what are some of the things you liked and what are some of the things that you did not like?
I was going to let some of the folks in Miami take a shot at that, given the fair number of accelerators that are down in that particular.
Yeah, I can start. And so you're in Gainesville, go Gators, I have to say that. We work closely with accelerators. Accelerators are a great source of deal flow for us. Depending on the reputation, we always look at it with a pretty strict eye. It doesn't just mean, oh, it came from this accelerator, 100% going straight to due diligence. We screen it like we would any other referral. Usually a great way, for the way I like working with accelerators, is like, show me a few of the companies in your portfolio and start building trust and a relationship there. And then you start really valuing, once you see good deals from that accelerator, you start really valuing the relationship and what comes out of there. I like checking in with accelerators on a regular basis. That's my advice.
The one comment I would give, having worked with a number of accelerators, if the accelerator has a program that identifies the specific weaknesses in the company and the specific programs within the accelerator that are going to help ameliorate those weaknesses, or just deal with the challenges that that company has in preparation for future funding, then that accelerator is of extreme value to the various funding sources. If the accelerator is a place for people to come and have, coffee and it's rent, then it's a challenge, and it doesn't do much. So I would say making sure that you take the time in any accelerator to actually do an analysis of the companies that you're accepting and to actually develop the programs necessary to advance the specific shortcomings of the companies in the particular cohort.
Another idea is office hours by people like we have here on this call. It's always a great way to give advice and get to know companies and get to know teams at a very low entry cost. So I would incorporate that into your program.
I would just say, it's a very competitive space. You can't swing a stick in Florida without hitting an accelerator. I think we're up to 45, 50, somewhere in that range. So you need to differentiate. If you're, in Gainesville, obviously you have a lot of talented people up there. But we look at accelerators just like Rebecca does for deal flow, and we definitely don't look at them as all created equal. There are some ones that are really good, and there are some ones that, we really don't see much value being at, and subsequently we don't see a lot of high quality opportunities or companies coming out of them.
I can just add from an accelerator perspective, we have our own accelerator. We do a due diligence on the companies, and we do introductions to, well, some of you, we already currently do those introductions. So it's about also creating that relationship, a trust relationship, and then we can do intros and, just phone call away and be like, this company is great. I think you can look at it. And we have companies in our portfolio that, for example, funds are reaching out to us because we do the whole interview and due diligence cycle. So like Rebecca said, we do a lot of the legwork. So that is good for the investors.
How does the panel feel about the future of blockchain solutions after this corona crisis in terms of logistics, healthcare, supply chain? What opportunities are you all seeing inside of blockchain?
So I'll start. I think blockchain is phenomenal. We've looked at many companies. I think it's still early. It's failed to deliver a real solution that solves a big problem. So on paper, it's amazing, and I keep waiting to be blown away. And I think it will happen, but I just haven't seen it yet. I firmly believe that. And like we said, maybe this crisis will let a company start rising out of the ashes and really finally deliver the power of blockchain.
I think the comment that I would make is we've seen a fair number of blockchain related companies, and almost all of them are attempting to shoehorn blockchain into a business where, look, there's an alternative solution that works just fine, and actually that's not the problem. And so there's very few pieces where it's the problem, and I think that's the key here. So to say generically, blockchain helping out in healthcare post-COVID, I think is a challenging statement. I can think of a couple specific areas that of ways to share and protect data on the blockchain that could potentially be very interesting and frankly, it would be one of the few ways to share and protect data. So that could be interesting, and we'll see what comes out.
Great. We have one more question, and really it's a few questions combined. Several people have asked about Florida in the separate ecosystem. So let's start with South Florida. Is South Florida considered a really large target for South American companies, in the sense of, do you all see the majority of companies in South Florida trying to work in South America? And then on the Tampa side, how do you get plugged into a community like Tampa? And Ben, why don't you talk about Orlando as well? Everybody sort of talk about their respective communities and how somebody could get plugged in there and work with folks like you all.
Saxon, is the question if companies based and operating in South America, are they coming to South Florida for funding?
If the companies in South Florida, are they focused on South America? Are you seeing that a lot?
I'm happy to take a stab at that one. So we keep pretty extensive data on the startups that come through and apply to all of our programs, and we try to follow up and get as much information as we can. I see that the answer is actually no. While we do see startups that are trying to do business in South America, sure. I mean, that's going to be obvious. I wouldn't say that it's the large majority of startups that we interact with. And I would definitely say that it's not necessarily the large majority of the successful startups that we've seen come through our program and go and grow beyond. I think that's a great thing, not necessarily that, investing in South America is a bad thing. On the contrary, like we have a really fantastic fund based out of Mexico City that covers all of Spanish-speaking LATAM. But I'm just like it from a South Florida perspective that our startups are doing business anywhere. South Florida, United States, Europe, Asia, whatever the case may be. So it's fantastic that it's not necessarily concentrating on one thing, even though we do see some that are working in LATAM.
My experience is the same as Miguel.
Same here.
And so I'm trying to get the Central Florida question that you had was more of a question of how to get involved, because clearly we there's no overwhelming connection one place or the other, and I think that you get in, depends on who you are and how you want to get involved, and there are a number of these various startup angel groups that will absolutely educate you on how to invest in the space, if that's what the interest is. If the question is you've got a neat business idea, then there's a number of incubators, accelerators connected to the universities. I happen to be a big proponent of connecting some of those to the universities, because there's a fair amount of good learning that you can get with those programs. And then, you should be aware of the various funding sources that are in your local market at the very least. So, who's operating out of Central Florida and who's operating out of Tampa, although every one of us operates throughout the state at the very least, and usually significantly farther than that. We have a home base one place. And at some point, COVID is going to be behind us. And at some point, you're going to be able to come into our office and you'll almost be able to shake my hand. And we're looking forward to that concept. So love people to come by and meet.
Yeah, an update on Tampa, getting plugged in, I think is there's a bunch of different organizations. And like Ben said, I would plug Synapse, my partner, Mark Blumenthal's organization that has really done a good job with that event, and hopefully they'll be doing it again this February. Hopefully by then we'll be doing in-person events again, which is kind of our version of eMerge, draws about 7,000 people, and I know all of you have gone in and participated in that. But I think there's a lot of good things going on across the state. Like Ben, we're all over this state, and a lot of success stories. I mean, the Magic Leap thing was unfortunate. My nephew actually works for Magic Leap. We got caught in that 1,000-person layoff over there, but I don't think that had anything to do with COVID. I think that had to do with them not executing and not building the company and driving revenue. On this side, we had ConnectWise exit last year, which was a unicorn exit. Funded by Arnie Bellini, one of our founders, and he created 77 millionaires out of that company. And those people are all out investing and doing great things in tech, and there's just a lot of good stuff going on. So I think it's easy to get involved, and you don't have to try very hard. And there's all kinds of great organizations, including everybody on this call that's open and constantly at these things, and there's easy access, I think.
This is Zach again. That was our last question. We're going to wrap up here. I really, really want to thank the panelists. You guys were great. I'm looking forward to continuing working with all of you guys. Thank you, DCE Productions, for putting this webinar on for us. And we will do some follow-up with everyone, and we look forward to doing another one. And in the meantime, everyone stay safe, hug your families, all that good stuff, and we will speak to you guys soon. Thank you.
Thank
you. Everybody stay
Thanks,
safe.
See you guys.
Bye-bye.
All the best.
Bye-bye.